let's have a look at a decent trade on the Aussie dollar in real time.
Wait. Matron, take them away.
And a warm welcome to one and all. This is your first time here. I am the big fella. That is the Scruffy Trader. What I'm trying to do is put trading in the real world. Maybe show you a trick or two along the way. So if that sounds good, do take a second to hit the subscribe button. Genuinely helps and keeps the channel on air. We'll grab a coffee. We'll crack on. And why? We all know Scruffy likes a coffee, but he loves the charts. And I like to trade and record it in a way that it can't be manipulated. And that's why I trade in the moment. If you look at the timestamps at the bottom, they're on the same day the video is released. And if you are part of the Scruffy Squad, they already know what I'm looking at and roughly why I'm looking at it as well. Because I do give them a heads up. And today I'm doing it for the whole guys because they suggested that we look at Aussie dollar. The pound's a bit wild at the moment, so it's advisable kind of to stay away from it. And obviously the dollar's having its moments as well. But because the dollar's having its moments, that gives volatility. The pound is driven by news at the moment, so that volatility is a little bit unpredictable, whereas the dollar's volatility is predictable. And that's what we're going to have a little look at right now. And what I'm also going to be doing, because I've got to go out later, is set up a series of orders which are going to be staged and stacked. And this is for you, Bubbles. A little salute to you, my little fella. Yes, you know who you are. And I'll keep you on the right side of the track. Don't you worry. Little bit of an in-joke. Bubbles is one of the Scruffy Squad members. He's doing really well. And he's interested in stacking and staging. Well, what they are is the two different concepts wrapped in the same wrapper, shall we say. Double-decker. Now, staging is where you're basically breaking up an order into sort of, you're going backwards in time, shall we say. So you're going backwards for your entry. And stacking is a way of trade management where you open multiple orders at the same time, but they all have different targets, and it saves you trying to carve off because it'll do it for you. So let's build this up and we'll have a look. Now, I've already been speaking to the guys about this morning. I pull this down. We had a good morning call this morning where we all get together. We do this every morning at 8 o'clock. Have a little bit of a chat, some of your concerns, a little bit of mental therapy, and it's real time. And in this, we asked about, should we trade Aussie dollar, and the pound came up, etc. So I take it a little step further. And if I put this down into here, I've broken this down fully for them. So show them where the levels are, give them a good idea of how you put your fibs in, where your entry exits are, all of this sort of thing. Because you can have it all predefined before you come to market. Now your entry exits are just areas of interest on the chart. And then just before we go into trade, as you can see at 9:58, I put up the sheet. It's told me it's pretty good to go, and it's going to be a sell. Okay, so this is for 10 o'clock. And if we look at the time now, sure whether you can see that, but it is currently just gone. It's on the 10 o'clock candle, but there you go, 10 o'clock. Okay. So what we're going to be doing now is keeping an eye on this. Now I can see it's in the zone that I'm interested in. So my break point is down here into the green. So I'm going to drop this to 15 minutes. and I want to have a little look at what's going on. So sure enough, there's the sell coming down. We just push this out further. You can see we've had a strong drive. It's pushed down. It's tried to move up. It failed at these levels. I couldn't do anything till this one is broken, which it is now. Into the hourly, that is confirming what I suspect. Down into the 15 to monitor. Watch what's going on. That's given me an area of interest down here. And I want to see if there's been a 5-minute close underneath. And there has. Right, so this has given me some areas that I can now work to, because I need to, as I say, step out. So what I'm going to do is I'm going to have a quick look just to see what's going on. And we're going to drop some orders into this, and we're going to leave them. Now the orders I'm going to drop in, oops, I'll be under this candle here. Now you can do a candle count, and I'll explain that, but there's no point because there's nothing. You go 5 candles back, and what you're looking for is kind of best fit. You know what it does is it allows you time to see it. Now I've got a couple of areas I'm interested in. There's here, here, here. Now for staging backwards, what I'm going to do is, because if it goes up beyond, we're kind of caught between 2 points, but if it goes up beyond this green, I'm probably wrong. So what I'm prepared to do is I'll be entering here, and I'm going to stage up to about the base of there. So that'll be the staging point. Goes beyond, I'm wrong and I'm out, sort of thing. And it's not that far, not really. And then I'm going to have orders running down into this one. Okay, so that's the game plan. That's what we're going to do. So what I'm going to do is I'm going to put a series of orders in that are going to be selling, and it looks like it's running away from me. So I'm going to use the edge of here, and I'm just going to drop in some £1 orders that are staged and stacked. I'll just quickly drop these in. Because it's very easy to do. Okay, and then, whoops. And then we want one more. Okay. Right, so the first bunch are in, and they kind of triggered straight away. So what are we looking at here? Well, if I move this back just so we can kind of see. Right, what we have are a bunch of orders. Now it's triggered 4 of them, but they each have an individual target. And it's 5, 10, 15, 20, 25, 30, that sort of thing, all right? Basically, you're stacking up a single position, but with carve points. So I don't really have to watch this. Now, I will do for the next sort of 20 minutes, half an hour or so, because I've got to go out. So every time sort of 5 pips is triggered, I'll then just put the order back in its place. And then it might get me another 5 pips and another 5 pips while it's bouncing around. But once it starts motion, in other words, gets past 10 pips, I won't be adding the orders in. I'll just let it do its thing. Now, what it can also do is come back on itself. So what I'm going to do now is I'm going to put in a series of orders, all stacked, running backwards to come back to this entry point. Now that can give me extra profit, and The reason behind that is very simple. I want to reduce the exposure. If I go to market 100% here, in other words, I put a full position on at 20 quid a point and it triggers, I've got nowhere to go. But if I had staged orders going backwards, as it goes backwards up to the stop, it reduces exposure. And that reduced exposure naturally gives you more upside. What this does, because I don't believe in risk reward, I think that's a load of horseshit, right? You're automatically setting you up for a fall. What you want to be doing is you start in the middle ground and then you try and stack the odds in your favor. And that's how you do it. It's kind of how you pay. It's kind of how your pension funds are built. They will buy units as the price gets better for it to move forward. It's kind of that principle, but on a very small scale. So let me stack it in. We'll run the trade and we'll get anything over 50 quid I'm happy with. Because I work with money as well. I couldn't give a toss about pips counts, trying to be a hero, holding on forever. So I'm going, I'm swinging for the fences and I held it for 200 pips. So what? Right? I got in, I got out, I got paid. What did you do? You got 200 quid today, but you lost 500 tomorrow. Yeah, you're brilliant. I'll stick to my way. Right. Let me do this. Okay, guys, so it's come and stop me out. But what you do now is you restart the process. That's simple. If it's going to come up and take the orders out, how do I know this isn't going to keep on rocking and take me into a loss? So I'm better off taking what I've got, reassess what's going on because the conditions haven't changed in this hour, and then look to re-enter if I so wish. So what that lot's done, there you go there. They've all stacked out and they've paid me reasonably well with no management. And that was the key part of this. I didn't want to put management into it. All I wanted it to do was set it up and then let it get on with it. And got to pop out in 10 minutes, so it's timed it quite well.
Good job.
Very simple trade, preset, pre-managed, and then all I had to do was pick the direction. Because I didn't go silly with the targets, it was quite a safe trade. And that's what I'll say about day trading. It's about keeping your trades safe. Now, the Aussie dollar, it can move, but it doesn't move that quick. So a 10, 15 pip target was about right, and just let it go boom, 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 boom. Happy days. And then if I so wish, have another look at the bias, see if I still agree with it. If I do, happy days, off we go. If I don't need to trade this asset anymore, I just look at something else. And that's another thing that I like to do as well. I'll trade a single asset, you know, in this case the Aussie dollar. Once I've been paid, I'm done with it. I'm finished with that one for the day. And then I'll maybe look at something else, maybe it's cable, because it might be setting up. And one of the reasons why I do that is because then I'm looking at it with fresh eyes, you know, and I've got a non-bias on it. Again, it helps you. So just a little tip. And so that was for you, Bubbles. Little salute to you, my friend. And as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.